What if I told you that $5,000 in your hands, yes, yours, could be the first domino in a chain reaction toward real, lasting financial freedom? Not because it's a magic number, not because it's enough to retire on, but because it's yours. And with the right strategy, it can go from sitting still to quietly working for you 24/7. This video isn't just for finance bros or stock market experts. It's for you, the beginner, the curious one, the person who's thinking, okay, I've got some money saved. Now what? You don't need a degree. You don't need to know what a candlestick chart is. You just need the willingness to learn and the courage to start. I'm going to show you what $5,000 in dividend stocks actually looks like in the real world, what kind of monthly income it can generate, where the traps are, and how people, regular people, are slowly building wealth without needing millions. So don't click away. If you miss what's coming next, you might stay stuck in saving mode forever, while others move quietly toward financial independence. And hey, if you're done with fluff and ready for real strategies that work, go ahead and subscribe right now. This channel is built for people like you, people who start small but think big. So you've got $5,000 and you're thinking, hey, let's make this money work for me. Someone mentions dividend investing and you imagine monthly checks rolling in while you sip coffee in your pajamas. But here's the kicker. If you're earning a 2.24% annual dividend yield, that's only about $112 a year. Yep, that's less than $10 a month. That's not buy a Lambo money. That's maybe get 2 Starbucks drinks money. Let's keep it real. A lot of beginners hear the word dividends and assume it means instant passive income. But that yield number, it's just the annual payout divided by the stock's price. It's like figuring out how many fries you get per dollar. If you're expecting financial freedom from a couple of dollars a month, we need to talk. This is why understanding what yield actually means is key before you dive in headfirst. Now, here's the reality check. If you want to earn $5,000 in monthly dividend income, you'd need to invest around $2.7 million at that same 2.24% yield. Yep, million with an M. That's not to scare you, it's to show you that the math matters. And if you're thinking, well, dang, that escalated quickly, don't worry, there are smarter ways to build income without needing a small fortune upfront. And hey, if you're already learning something new here and thinking, why has no one explained it like this before? Go ahead and hit that like button so the algorithm knows this kind of real talk should reach more people like you. Because next, we're going to crack the mystery behind how people actually receive monthly dividends, even when most stocks only pay every 3 months. Now you're probably wondering, wait, if most stocks pay dividends quarterly, how do people get monthly dividend income? Great question, and here's the fun part. Some companies like Realty Income, yep, their ticker is literally O, are famous for paying dividends every single month. They brand themselves as the monthly dividend company, which is kind of like being the pizza place that guarantees delivery in 30 minutes or less. It's consistent, simple, and a favorite among folks chasing passive income. But monthly paying stocks are just one piece of the puzzle. There's a little trick called dividend laddering. It's basically like scheduling your income to arrive when you need it. Imagine owning 3 different stocks. One pays in January, one in February, and one in March. Repeat that cycle, and bam, you've got money coming in every month, even if none of them are actually monthly payers. It's a smart workaround that doesn't involve magic or a spreadsheet from Hogwarts. And then there are the high-yield ETFs and closed-end funds that pay monthly. These are like the fast food of dividends. Quick, tasty, but sometimes questionable. They can offer juicy yields, but some of them do sneaky things like returning your own capital. So while the numbers look impressive, you might just be getting your money back dressed up as income. You've got to read the fine print, or follow folks who already have. If that sounds a bit messy, don't worry, we're just getting warmed up. In the next part, I'll break down exactly how much money you'd really need to pull in $5,000 a month, depending on the type of investment you choose. And trust me, the difference between a 4% yield and a 12% yield will blow your socks off, or at least wrinkle your brows a bit. All right, let's answer the big question. How much do you actually need to make $5,000 per month in dividend income? Well, it depends on your dividend yield. If you're investing in something safe like a broad market dividend ETF with a 4% yield, you need around $1.5 million invested. Oof, I know, that sounds like monopoly money, but don't freak out. This is just the slow and steady route, great if you're playing the long game, and sleeping well at night matters more than chasing high returns. Now let's say you're okay with a little more risk. Maybe you go for some high-yield ETFs offering 10% returns. Suddenly, the number drops to $600,000 needed. Want to go even bolder? Some covered call ETFs and risky REITs and closed-end funds might yield 12 to 15% or more, dropping your required capital to around $400K to $500K. But remember, these come with warning labels. Think dividend cuts, high fees, or value erosion. It's like riding a faster bike. Fun, but don't forget your helmet. So what can you actually do with this? Start by choosing your risk level. If you're just beginning, you could split your $5,000 across different yield tiers. For example, $2,000 in SCHD, a stable 3.5 to 4% ETF, and $2,000 in JEPI, an option-based ETF around 10%, and $1,000 in a monthly payer like Realty Income. That combo won't make you rich today, but it will give you real-world experience with different dividend stocks and how they behave. This kind of hands-on learning beats any book, and trust me, when your first dividend hits, even if it's just $2.17, you'll feel like Warren Buffett. In the next section, we'll break down exactly the pros and cons of chasing high-yield income versus playing it safe, because knowing what to avoid is just as important as knowing where to invest. Here's where most beginners get stuck. Should you go for high-yield stocks or play it safe with lower yields? It's like choosing between a gourmet meal that takes hours to cook or instant noodles, fast and satisfying, but possibly questionable. Lower yields, 2 to 5%, usually come from solid companies like Coca-Cola, Johnson & Johnson, or ETFs like SCHD. They offer steady growth, fewer surprises, and better long-term sleep. The downside, you need a big chunk of money invested to see meaningful income. Now, on the flip side, those high-yield dividend stocks and ETFs, think 8 to 15% or more, give you more income up front. Sounds awesome, right? But here's the catch. They often come from riskier places, like closed-end funds using leverage or REITs that can get hit hard in downturns. Some might even return your own capital, which feels like getting a paycheck with your own money in it. So while the numbers look sexy, the sustainability might be not so much. Still, there's a smart way to blend both. You don't need to pick a side like it's a Marvel movie. A diversified monthly income portfolio can include dividend aristocrats for stability and a slice of high-yield options for cash flow. It's like making a smoothie. The right mix matters. One examples, try SCHD, modest yield, strong growth, with JEPI, monthly payout, higher income, and sprinkle in a little RYLD or QYLD if you're ready to handle volatility. And hey, if this mix of real talk and practical ideas is helping you think differently about dividend investing, go ahead and subscribe to the channel. Here, we don't do hype, we do real strategies that work. Plus, if you stick around, I'll show you exactly how to put all these moving parts into one simple plan to build consistent monthly income. Building a monthly dividend income portfolio isn't some secret reserved for Wall Street pros. It all starts with setting clear goals. How much monthly income do you want? $500, $5,000, and how soon? If you want results in 2 years versus 20, that'll shape your entire strategy. Oh, and don't skip the part about knowing your risk tolerance. Are you chill with volatility, or do you panic when the market sneezes? That one detail will determine what kind of investments you'll be comfortable holding long-term. Next, choose your yield strategy. If you're conservative, a 4 to 5% dividend ETF combo might work. Just know you'll need more capital. Want more cash flow with less capital? That's where option-based ETFs and high-yield REITs or closed-end funds enter the chat. One realistic combo? $200K in a 4% ETF like VYM, and another $200K in higher-yield funds like JEPI or RYLD. Blend the two, and you've got balance. Some growth, some cash flow. It's like building a sandwich. Don't use all spicy sauce, or you'll regret it. Then comes the art of monthly cash flow techniques. Don't just buy random stocks. Go for those that pay monthly, like realty income, or ladder your quarterly payers. Basically, choose dividend pay dates spread across the calendar. That way you smooth your income flow, like setting up a paycheck system. Add in ETFs like QYLD that pay monthly, and boom, you've got recurring cash, even without a real job. Just don't forget to track what's coming in. Otherwise, it's like owning a vending machine and never counting the coins. Last but not least, diversify and monitor. Mix industries, a little real estate, some utilities, sprinkle in healthcare or finance. Don't marry one sector. Rebalance once or twice a year, and always check your fees and tax structure, because nothing kills dividend joy faster than a surprise tax or a sneaky fund charging 2% in fees. Stick with me, and I'll walk you through the smartest moves to avoid those traps while keeping your portfolio income growing every month. Look, it's easy to watch YouTube videos about passive income and think, sweet, I just need to buy a few high-yield ETFs and boom, early retirement. But real-world results, they paint a different picture. On places like Reddit, you'll see folks showing $5,000 per month in dividend income, but many of them have over $600K parked in high-yield, sometimes volatile investments. And let's be honest, not everyone's sitting on a pile of cash like that. So we've got to talk about expectations. Many of those higher income portfolios rely on funds that return capital or slowly bleed value. Sure, the cash hits your account every month, but your total portfolio might be quietly shrinking like an ice cube in the sun. Articles from the Wall Street Journal and financial experts constantly wave red flags here. It's like getting a raise at work while your savings slowly disappear. Feels good until you check your balance. So yeah, income is great, but sustainability is greater. That's why so many investors, especially beginners, start with dividend growth stocks or diversified ETFs and reinvest those tiny dividends. It's not flashy, it won't get you YouTube fame, but it's the kind of slow-cooked wealth building that actually works. Think of it like planting an orchard. First you water, then you wait, then one day, the apples come every season without fail. You just have to hang in there. And hey, if this sounds different from the get-rich-now noise you're used to, that's the point. We're in this for long-term financial freedom, not lottery tickets. Up next, I'll break down some must-know formulas and tools that serious dividend investors use to actually plan their income, not just hope for it. You'll want to stick around for this one, trust me. All right, time to nerd out just a bit, but don't worry, I'll keep it simple. One of the most powerful tools in dividend investing is a basic formula. Required investment equals income goal divided by yield. So if you want $60,000 per year, $5,000 per month, and your investment pays 4%, you'll need $1.5 million. If your yield's 10%, you only need $600K. It's just math, but it's math that can change your future. It's like using a recipe. You can't bake the cake without knowing how much flour to use. Now let's talk about dividend yield versus sustainability. A stock might flash a 15% yield and make your eyes light up like a Christmas tree, but where's that money coming from? That's where the payout ratio steps in. If a company is paying out more than it earns, like 120% of profits, it's like someone promising to give you $100 every month while making $90. Not going to end well. You want yields supported by solid earnings and real cash flow. Here's a tool pro investors use, laddering. It's not just for bonds. You can use it with dividend-paying stocks too. Buy one stock that pays in January, another in February, a third in March, and so on. This way you build a cycle of cash flow that covers you every month without relying only on high yield or monthly payout funds. Think of it as creating your own personal calendar of income, where every month something's hitting your account. This kind of planning might sound intense, but trust me, it's what separates the wishful thinkers from the people who actually live off dividends. And if that's your dream, you'll want to see how all of this comes together in one final framework. Because next we tie everything up with a real-world summary that'll show you exactly what's possible and what's not when starting with just $5,000. Here's the cold truth. If you're starting with $5,000 and expecting it to shower you with monthly dividend income, you're in for a reality check. At a 2.24% yield, that's only $112 a year. not $112 a month. A dividend portfolio like that isn't paying your bills, it's buying you a few pizzas. And you know what? That's okay, because what it does give you is a front row seat to how real-world investing works. Think of it as paying for your own financial education with actual skin in the game. To truly earn $5,000 per month from dividends, you either need a massive amount of capital or access to higher-yielding assets. But don't let that scare you. It should inspire you, because now you know the roadmap. It's not magic, it's strategy. You can mix modest yield ETFs, monthly dividend stocks, and high-yield funds to build something that grows over time. And even if you're only earning a few bucks a month now, that's your proof of progress. That's compound interest whispering, keep going. The key is putting it all together. Pick your yield target, diversify wisely, reinvest when possible, and stay in the game. Stop chasing 15% returns from random funds that sound like sci-fi acronyms, and start building a plan you actually understand. You don't need to be a Wall Street genius. You just need to start. Because financial freedom isn't about luck. It's about consistent, boring, powerful habits that snowball over time. So if you're serious about turning your dividend strategy into something real, even starting with small amounts, stick around, because up next, I'm going to hit you with an opening that turns this whole journey on its head. What if the truth about dividend income wasn't what anyone ever told you? So now you know the truth, not just the numbers, not just the strategies, the mindset behind building a dividend portfolio that actually works. The question is, what will you do with it? Will you keep waiting for the perfect moment to start investing? Or will you take the $5,000 you do have and turn it into your first step towards consistent monthly income and long-term freedom? Think about it. What's holding you back? Fear of not knowing enough? Fear of doing it wrong? Let me tell you this. No one who's financially free today started out an expert. They just started, and they learned as they went. So here's what I want you to do. Drop a comment below and tell me, what's your monthly income goal with dividends? $200? $2,000? Let's talk. Like this video if you felt every one light bulb go off. And subscribe now so you don't miss the next videos, because I'm going to show you exactly how to grow your portfolio, pick better dividend stocks, and avoid the traps no one else warns you about. This is your moment. Your first dividend dollar is waiting. Let's build this together.